A journey of empowerment and financial inclusion. Welcome to the conclusion of our course on microfinance and self-help groups. Over the past weeks, we have explored how microfinance and SHGs foster empowerment, reduce poverty, and drive sustainable development. Let's take a comprehensive journey through the modules, connecting the dots between theory, practice, and the impact of these financial innovations. Beginning with week 1, the foundation of microfinance. We started with the basics, understanding microfinance as a mechanism to bridge the gap between traditional financial systems and underserved communities. Microfinance empowers individuals by providing small collateral-free loans, insurance, and savings account, enabling them to start businesses, manage emergencies, and improve their living conditions. We also recognized its unique focus on marginalized groups, especially women, as agents of economic growth and the change. In week 2, the Grameen Bank model. So in week 2, we explored the revolutionary Grameen Bank model by Nobel laureate Professor Muhammad Yunus. The model's innovative approach, small loans, group accountability, and weekly repayments transformed the way financial institutions engaged with the poor. By focusing on women and rural households, Grameen Bank showed us that trust and community bonds can drive economic resilience and empowerment. Week 3, the village banking model. Building on Grameen's principles, the village banking model emphasized community ownership. Village banks, managed by their members, became hubs of financial services. They encouraged savings, facilitated lending for small businesses, and nurtured local economies. This model demonstrated the power of grassroots financial systems to foster self-reliance and reduce poverty. Week 4, self-help groups or SHGs and the SHGs bank linkage program. In week 4, we introduced to India's flagship SHGs bank linkage program driven by NABARD. Self-help groups, small voluntary collectives transform rural financial landscapes by pooling resources and accessing formal credit systems. Through collective decision making, SHGs empowered women to become financially independent and socially empowered, addressing needs like healthcare, education, and small business funding. Week 5, comparing traditional banks and microfinance institutions. In week 5, we compared traditional banking systems with microfinance institutions. While banks cater to a broad, financially stable customer base, MFIs prioritize economically marginalized groups. Their community-oriented approach, small loans, minimal documentation, and peer accountability offers a lifeline to those excluded from formal banking, especially in rural and underserved regions. Week 6, impact of microfinance on poverty alleviation. We dive deeper into how microfinance has lifted millions out of poverty. From Bandhan Bank's success in fostering entrepreneurship to Kudumbashree's grassroots empowerment in Kerala, microfinance has catalyzed social mobility, improved health and education, and strengthened community resilience. Week 7. Challenges in the microfinance sector. Despite its successes, microfinance faces challenges. High interest rates, over-indebtedness, and the pressure of repayments sometimes undermine its purpose. We discussed regulatory gaps and the need for robust frameworks to ensure ethical practices, financial literacy, and sustainable growth. Week 8. Innovations in microfinance. Week 8 showcased the technological transformation of microfinance. Mobile money platforms, AI-driven credit assessments, and digital SHG tools have revolutionized how financial services are delivered, making them more accessible and efficient. These innovations ensure that even the most remote communities are connected to financial systems. Week 9. Microfinance and Sustainable Development Goals (SDGs). Microfinance and the SDGs go hand in hand. By promoting entrepreneurship, gender equality, and economic resilience, microfinance addresses critical goals like eradicating poverty, reducing inequalities, and fostering sustainable communities. This linkage underscores microfinance's broader role in shaping a fairer, greener world. Week 10. The role of SHGs in community development. This week emphasized the community impact of SHGs. These groups not only promoted financial inclusion but also catalyzed social transformation. SHGs have improved infrastructure, empowered women, and fostered collective action against social challenges, redefining grassroots leadership. Week 11. Ethical issues in microfinance. As microfinance expanded globally, it raised important ethical concerns such as balancing poverty, alleviation with commercialization, high interest rates over indebtedness, and borrower exploitation emerged as challenges requiring transparency and fair practices. We also discussed the client protection principles, a vital framework to ensure ethical treatment of borrowers, and explored how technology and regulation play critical roles in advancing financial inclusion while safeguarding the clients. Week 12. Future trends in microfinance. As we recap the journey through microfinance in the digital age and beyond, we explored the transformative power of microfinance from its roots with Dr. Muhammad Yunus to its evolution into the digital platforms, revolutionizing financial inclusion. Digital microfinance has introduced innovations like mobile banking, mobile money, AI-powered credit scoring, and even blockchain, making financial services more efficient, scalable, and accessible. However, we also addressed challenges such as the digital divide, data privacy, and the risks of over-indebtedness. Furthermore, we highlighted green microfinance, a bold step towards integrating environmental sustainability with poverty alleviation. From solar panels to climate resilient farming, this approach combines financial empowerment with ecological preservations. As we conclude this journey, it's clear that microfinance and self-help groups are more than financial tools. They are transformative movements that empower every individuals and communities. Their impact transcends economics, fostering self-reliance, social cohesion, and sustainable development. I hope you now feel empowered with a deeper understanding of microfinance, its potential to transform lives, and its evolving role in the digital and sustainable era. Remember, your insights and actions can contribute to fostering financial inclusion and driving positive change in communities worldwide. Thank you all for being part of this journey. Together, we can build a more equitable and sustainable future. Dear friends, you now have the knowledge to contribute to this movement. Whether as a policymaker, an entrepreneur, or advocate, let's work together to create a world where financial empowerment is universal and every individual can realize their potential.